Hello everybody, this is Jose here. We are about to start in around 30 seconds, more or less. Please go ahead and just for me to know that sound is okay, please go ahead in the comments box, type a quick hello, good morning, good afternoon, good evening, depending on where you are in the world. Nice little message, and that would be my clue for me to know that you hear me. Please go ahead in slide for the presentation of the session. Today we are getting together for long term, isn't it? So let's begin the session officially. Welcome to the session, everybody. May 16, 2019. My name is Jose Blasco. I'll be your guide. Today we are getting together, as I just said, for longer term purposes. So we're going to be looking at anything above and beyond intraday trading. Some trades will be a few days, maybe some trades will be a few weeks. We'll see what we find in the marketplace. We'll analyze it, we'll plan trades, we'll look at the probability, the risk, the reward, we'll look at the parameters, and we'll put those trades together. Okay, so let's be ready to work as a team. If I have questions for you, please give me answers. If you have questions for me, I'll give you the answers. So that way we work in a way that is well organized. Okay, as well, be ready to mimic what I do. So if you feel like executing any of the trades that I will be planning, of course, you know, in my mind, this is the way to practice it for yourself and be able to grow as a professional trader. Obviously, when you do this practice and you mimic my trades, the trades I will be planning during the session, you need to decide if you want to use a big size, a small size, you want to use paper money, real money, demo accounts, real accounts, live accounts, all those different things. Okay, so that will be your decision. Okay, but on my side, I will be planning trades, meeting all the parameters and the rules that we have been exploring together. Okay, so ready to get started. We only have the disclaimer pending, and as we complete the disclaimer, will be ready. So let's go for it. The following videos, clips, and demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Very good. So here is a TradeStation. Let me go ahead and close that slide as well. We don't need a slide anymore. So we are now left with TradeStation. I will also be, let me get a trading view as well, so we can have all our charting tools, all the tools we need for planning those trades ready. So I'm just moving trading view from one of my screens into the main screen as well. So I will be using a trading view as well to plan this trade, these trades. Okay, so we'll be working on all fronts of the opportunities we find in the marketplace. Okay, let me take a look at your questions before we start. Good morning everybody. Many good mornings. Geneva, you are trying the app in TradeStation. Wonderful. So you are doing very, very well. Joining us in the session, because these sessions will certainly help you to understand what the app can do and how to use it better. So definitely way to go. Everybody should know at this point, and I believe that's the case, that there is a beautiful and powerful user guide. The user guide is designed to guide you, as the name suggests, and it's definitely very, very recommended to read it before you start using the app. Okay, so if you're new to the app, Geneva or anyone else, make sure you also take a look at the guide, because it will help you greatly. Okay, and talking about how to use the app and things like that, I'm pointing at our website as we speak. I'm looking at the get together section as we speak, and the reason why is because I want to point at May 18, which is going to be next Saturday. We have a super special sharpening session, which is going to be full 2 hours of Q&A, and I have to say it's gonna be very, very powerful, because I have already received many questions from many of you guys. I have been putting them together in a document, and in that session we're gonna go over those questions together. And the reason why I know it's gonna be a powerful session is because I have already read the questions, so I know that those questions are coming from a very serious application that many of you are doing of how to use the rules and the app and putting it all together. And basically, if you have been watching the recorded sessions available on the YouTube channel, which by the way is right there, okay, right in the below part, you got the YouTube sessions. So if you have been watching the YouTube sessions and you happen to join us on May 18 at 11 a.m. Eastern time for those 2-hour, very special Q&A session, it's just gonna be amazing, because it's kind of like everything that we have been teaching and all the things that if you have been watching those sessions you are supposed to know. Well, then when you have taken all those rules and all those applications and you put them in place in the marketplace in real-time market conditions, then many situations occur that produce questions of what do I do in a case like this, right? And those questions and those answers are gonna be so enriching. Okay, so Geneva, with your comment stating that you just started using the app, you kind of opened the door for me to not only say what I said when it comes to you're doing very well joining us and anyone else who is testing or trying the app as well, but on top of that, I would like to make sure that you guys don't miss, and this is for everybody, the sharpening session, because it's going to be very powerful, as I said. Okay, Lisa, Jose, where should we send questions for Saturday? Yeah, the questions for Saturday should be sent to the support email, if you wish, which is rich@tradewithufos.com. So I just put it on the comment box. In the comment box, you can send the questions there. You don't need to send them if you are sure you're gonna be there live. You can just phrase them, and I'll take the questions as well on the fly. But some of you have sent questions including screenshots of charts and things like that. This is really beautiful, because then we're gonna be able to be very precise with the answers on Saturday. Okay, good. Altong, how are you? Good morning, everyone. Wonderful. Good. So very well. So guys, we are all set to begin the session. Okay, we're all set to begin the session here, and therefore let's begin. So what do we have in front of us? Well, we've seen this before, isn't it? We have a beautiful scan running on TradeStation. Okay. By the way, if you don't have the scan, send us an email to rich@tradewithufos.com and we will email it to you, so you can have the same scans that I have in here that have been detailedly explained during those sharpening sessions over the weekend. But if you want to kind of avoid having to go over all the recordings to get the scans set up by yourself, again, you email us, we'll send you a scan file, you can import it into your TradeStation, and next thing you know, magic, you have the same scan I am running on my side. Okay, so in that scanner, okay, very quick, this should be known by everybody, but just in case, we got 2 scans that look at directional opportunities, either to go long or to go short. 2 scans that look at neutral opportunities to basically do credit spreads and profit from markets not going down and profit from markets not going up. We don't care where the market is going, we just want it to not to go up or not to go down and profit from that. Or being purely non-directional, where we are actually expecting the market to remain in a very specific range of price. Okay, so we are actually expecting the market to not to go up and not to go down either, mainly stay kind of about the same. Okay, and of course we know all of that thanks to the AutoUFOs app, which is our very powerful assistant, very powerful helper on how to execute those trades with high probability. Okay, but anyway, so what I'm going to do today, especially since what has been happening in recent times, isn't it? So if you look at the S&P, and this is just to add a little bit of extra comment. Okay, so we got green UFOs below, so many of buy orders, but the market has been dropping as well. Notice how many of the sell orders have been consumed. That's why we don't have red UFOs, okay? But not every stock in the market looks like that. This is the S&P. But the fact that the market has been going down creates a situation where in other stocks, not in the S&P ETF, okay, which is the one I'm looking at the moment, SPY, but in many stocks that belong to the S&P, this drop in price to the downside has probably created pockets of unfilled orders in places somewhere above. And what am I trying to say? Well, what I'm trying to say is that if you have UFOs above price, and then you also have UFOs below price, okay, so that's when the markets are likely to remain range bound. And why not to exploit these opportunities with option strategies? Typically we utilize iron condors, isn't it? So why don't we exploit those opportunities with option strategies. Okay, I mean, this is always good to exploit those opportunities, but especially now that in many stocks we're going to have these situations, should be lucrative and safe. So we can take a look. Okay, so what we have done in the scanner here is to run a scan looking for those opportunities, but also when the scanner is looking for those opportunities, the scanner is also looking for options, okay, or I should say stocks with options that have a great level of premium built in. Options with hefty level of premiums. You don't want to sell options with, just a couple of cents of premium. You want to sell options with a decent amount of premium built in. Okay, that's the idea, that's the goal, that's what we're looking for. Okay, and that's what the scanner is looking for. Okay, now the danger, okay, I always say that, and it's kind of like the first step, the first thing we should be doing. The danger is that when you see those options with very hefty premiums, there are times where there is a reason for that, and therefore you probably remember, and if it's the first time attending this session, pay attention. You probably remember that one of the first things that we do is always using a website such as briefing.com to be able to input the ticker symbols of those stocks to identify when is the earnings date, which in this case is May 23. And May 23, to be honest, it's a little bit problematic because today is May 16. Tomorrow, May 17, is when options will expire in this week. Options expire on Friday. I believe we all know this. And the next expiration day will be May 24, which is the Friday after. But notice how this stock is actually reporting earnings on May 23, which is before the next expiration date. So, so what's the reason why those options are so, built in when it comes to levels of premium? Well, the reason is because there is danger ahead. There is an earnings report very close by, and many people are buying options to either speculate or to protect themselves. And because many people are buying them, those options have gained value. So you would be delighted to sell them. We would love it if there was no risk ahead of us. But there is risk, which is the possibility for a big gap on the earnings day, which is May 23, happening prior to the expiration date of the options. So ADSK, even though it's in the list, that would be a stock to be ignored, because that particular stock is adding too much risk. Okay, so what I'm going to do, I'm going to go over certain symbols. For example, CRM. Those are some of the symbols in the watch list, and I want to make sure that I understand what's going on when it comes to the earnings reports. For example, with CRM, a company known as Salesforce, they are reporting earnings on June 4. So let's take a look at CRM. Because if I was able to plan some sort of a non-directional trade with CRM, given the fact that earnings are happening on June 4, I could actually plan trades using either May 24 expiration or even May 31st expiration, which are 2 Fridays happening prior to June 4. And therefore, I may come up with a trade where I collect great level of premium, but without having to go over the risk of earnings being reported. Okay, so that sounds interesting to me. And in order to explore this, we're gonna drop to the 60-minute time frame, because of course, when we are doing non-directional trades or trades where we end up focusing on selling options, what is known in options trading as credit strategies, when we are doing that, we want to use the shorter expiration date as possible. That would be ideal. Okay, using the shorter expiration date as possible. That would be very ideal, because that way, very quickly, those options will expire, become worthless, and you are out of the trade, out of the risk. Okay, where if you were to use a long-term expiration option, now you are exposed for a long time for you to be wrong, meaning that the stock you thought would remain sideways is not remaining sideways. Okay, so we like to use short expiration dates, and therefore it is common when we plan those trades that we use time frames such as 60 minutes. Okay. So what do we have? Well, we have a beautiful setup, my friends. Very beautiful setup. Look at how many green UFOs we have below price, and look at how many red UFOs we have above price. I mean, we also need to be sensitive that the market will open at 156.15, which is 0.7% up. It's going to be somewhere here. Okay, so that means that UFO, even though it's on the chart, that UFO is going to be removed as the market opens. Okay, but still you got 1, 2, 3, 4 red UFOs above, 1, 2, 3, 4 green UFOs below. Well, I think it would be reasonable to say that, CRM is not likely to come below those UFOs anytime soon, and CRM is not likely to go above those UFOs anytime soon. And if we were to find a way to sell options above and below and get premium enough to justify the risk of the trade, it would be fantastic, because from a probability point of view, we will be very, very likely to collect a profit. Okay. So now, before I get too excited, take a look at this number, 53.53%. This is the stats. This is the UFO performance stat. We always check pre and post market data to see if the number is the same or less or more. So normally it will be more or less. In this case, it's more. Okay, 55.95. So what is this telling you? What this is telling you is that the big players that are trading that stock have got into the habit of placing a significant amount of orders that many of them remain unfilled, and they place those orders during the pre or the post market, not during the market hours. That's why you got better stats when you add the pre and post market data instead of when you only use the regular trading hours data. Some other stocks is different. You have seen that before. Some other stocks will give you better performance. And the reason why is because whoever the market participants that trade the stocks are, remember, stocks is such a fragile asset, if you wish, isn't it? Because maybe CRM is being traded heavily by JP Morgan and Goldman Sachs and Deutsche Bank. But now you move to another stock, and maybe JP Morgan, that was very heavy on CRM, is not interested on the other stock. And maybe the reason why CRM has very good statistics with pre and post market is because of JP Morgan, but because JP Morgan is not interested in the other stock, they simply don't trade it. So you don't see the same statistical effect with having better results using pre and post market data. So again, you never know who is who trades what, but by looking at the statistics, the UFO performance stats, it gives you a pretty good and objective understanding of the real, the best, the more appropriate time frame for you to use. When you chart. Okay, when I say time frame, really what I meant to say is the amount of data that you plot. In other words, do you ignore the pre-market and post-market, or do you take it into consideration? In the case of CRM, we will obviously take it into consideration. Okay, and in this case, what happens? We have a similar setup: 3 UFOs above, 3 UFOs below. I could say the same thing I said before. It's not likely that CRM is likely to go below 141 anytime soon. It's not likely that CRM is going to go above 166, 167 anytime soon. Could that happen? Yes. Is it likely? No. Why? It's far. Why else? You got UFOs that are likely to bring the price either down or up, depending if they are green or red. And therefore, that stock is likely to remain range bound for some time. And that some time is our edge, selling options and waiting for that expiration date, which is also some time. Okay? That's the idea. Okay. Altong, the amount of bars I'm using here is 1000 plus, 1500 plus, and the calibration I'm using is the standard calibration of 0.5. Okay. The other day I talked about, when I do my own trades, I normally use 0.618. Normally when I conduct the get-together sessions, I'm using 0.5. If it makes you feel better to use 0.618, it's actually closer to what I'm used to do, so why not? So let's use that, and you will end up with similar setup, as you can see, as we concluded in the calibration session that we had last weekend. Okay, so it's not a big difference, but it adapts better to my trading style now. Okay, so why not? Maybe I'm gonna use 0.618 from now on. It really doesn't matter. If I use 0.5, it's just as good. It's just that depending if you wanted to make yourself a little more conservative or less, you would then play with those calibration settings. Okay. Side note: if you have not watched the calibration session that we did last weekend, please do not miss it. Go back to the YouTube and watch it. It's critical. Okay. It's a very important session to be watched. Okay, so we have this. Okay, so now the key question is, will I get paid enough if I do this non-directional trade? Okay, so to know that, you have to load the Option Station Pro, which is the tool in TradeStation where we're gonna be able to see the options prices. Remember, anywhere between 10 to 20 minutes before the open, normally it's about 10, the option chain will reset. So we are 11 minutes before the market opens, so realistically I got 1 minute to check that information. Let's see if I have time to do that. Okay, so Option Station Pro is loading on my other computer screen. I will allow it to finish to load and move the option chain into the main screen. So 1 sec, here we go. So I am now moving Option Station Pro here, and if I was to look at May 24, so what would it happen? So let's say I was to sell the 166 or 167. So how much would I get paid? 12. Okay, so well, that's not enough. So what if I was to use the next expiration date, which is May 31st? Well, the 167, okay, they just reset the option chain, guys. So, okay, 10 minutes before the open, they reset the option chain. So I will come back in a minute, okay? So we have homework to do. After the market open, we will double check what's going on with CRM, okay? So let's work on the UFO during the following 10 minutes, looking at trade setups, okay? The same process I just described for Salesforce. I'm just gonna do the same thing again for other stocks, okay? And then when the market opens, I will then plan the trades for all those stocks and execute them all at a time, okay? So next stock I would like to check, okay? So I would like to look into MDT, okay? MDT has earnings on May 23, so we cannot do that one. Merck, MRK. So Merck has earning on July 30. Okay, so this certainly qualifies for us to take a look and see what's happening. The price point of Merck is not $100+ like CRM. It's a cheaper stock. And you know, it's okay. You can see it's $77 per share, so it's okay. But always keep in mind that when doing non-directional trades, the more expensive the stock, the higher the price. It's normally easier to get the premium you need in order to be able to do the trade. If the stock is very cheap, let's say you try to do a non-directional trade on a $20 stock, then it becomes quite difficult to get the level of premiums that you need, okay? So just keep that in mind. So what do we have here in the 60-minute time frame? First, before we look at the UFOs, let's take a look at performance metrics. So 54.55, and if I add pre and post-market data, that 54 becomes 1, 2, 3, it becomes 49. So notice what happened here. What's happening here is that Merck, you know, whoever big player is trading Merck, that big player tends to cancel the orders placed in pre and post market if the orders were not filled. So that's why the performance stats are weaker. So what are we gonna do? Well, we're gonna be using the regular market hours in this case. In this case, we are not gonna be using pre and post market because it doesn't help us. John Hammer, CRM is in both the neutral long and the iron condors. Where does that affect the trade choice? So let me talk about that in a minute. Okay, let me talk about that in a minute, just to not to divert from that one. You have a good point, and you will see, John, how the answer it's very simple. Okay, very, very simple. So now, so we are looking at now. I would like to focus on the UFOs that we have available. The current price is 77.55, which is somewhere here. And if I look at the green ones, the nearest UFOs are down here. So if I was to take this line, which represents the distance from current price to below the UFOs, and I was to, you know, move it to the upside and align the bottom of the line to where the current price is, well, notice that basically the price is not exactly, but almost being here. The price is almost equal distance from here to here and here to here. We are more or less in the middle of the range. I know that because of the light blue line, okay? Not exactly in the middle. I mean, exactly in the middle is a little bit of a utopia. It almost never happens, but we are more or less in the middle, so it's good enough. And by the way, we don't need to be too precise here, okay? Normally, I'm very, very rigid with the rules because that's why they're rules. But in this case, okay, we will then be able to adjust the option strategy, and we'll have a little bit of wiggle room to adjust in cases where we are not exactly in the center of the range, okay? Again, ideally you start from the middle, but that's a little bit of a utopia, as I just said, okay? So we want to be flexible here, okay? Oh, Maka, yes. You know what? I was thinking about your question as I was saying it. To be honest, unconsciously, I was giving the answer and I was thinking about it. It was like, okay, that was a question for Saturday, okay? So anyway, very good one, Maka, very good one. So So what do we have? Well, I have the same setup I said before. If I could afford selling options all the way up here, and I could afford selling options all the way down here, and the premium was significant enough, well, then I would be able to set up some sort of an iron condor and just bet on the fact, okay? When I say bet, okay, make sure you understand that bet could be taken as a very negative word, okay, especially for the people that don't trade. They will look at betting like a gamble. In this case, when I talk about a bet, I'm talking about it from a professional point of view, which is a calculated high probability bet, okay? Casinos, okay, the house, which is a very, very profitable business. The bet against the customers. Is that making sense? And they use that term professionally speaking. Okay, so make sure you understand I'm using it professionally. Okay, so the bet is that that stock will remain range bound, you know, up and down for X amount of time going between those UFOs. And we just want this to happen. What would be bad for us is that next thing you know, it goes up above the UFO above, or it goes below the UFO below. That would be bad. That would produce a loss for us. But as long as that stock remains range bound in this pretty wide range, then we're gonna have a profit, okay? So my concern is that the range is wide. And why is that a concern? Well, because this is gonna make the risk to be very low. And why is that a concern? Because if the risk is very low, I will likely get paid very little. And if I get paid very little, the reward-risk ratio of the trade will tend to be pretty weak. Okay, and therefore, you know, as traders, we want to take risk, pre-calculated risk, but we should be assuming certain risk. So in the case of Merck, I will certainly give it a chance, because if the options are hefty enough in value, they are grown, they are built up in value, they are very overpriced enough, and I can do this trade, it's gonna be a fantastic trade with a very, very high probability, okay? But when I see that, the first thought that triggers my mind is, oh my God, we may not get premium enough, okay? Because obviously there are many, many market participants on top of us out there, and many of them are very intelligent people, and when they find a setup like the one we just found, they take it. And they take it means they sell options. And if many sell options, what happens to the price? It goes down. And therefore the options become cheap. In other words, now you get paid nothing for the trade. Why? Because it's so low risk that many people took it, so the options became too cheap for you to sell them, okay? So little extra explanations here that hopefully are helpful while we are waiting for the market to open in 3 minutes, okay? In the meantime, I would like to now go back to John Hammer, and John, take a look at your question, okay? Because what you notice is that CRM, which is in our non-directional scan, that trade is also found, you said, on the neutral long, okay, which is right here, okay, CRM, here we go, okay. So why is that? Well, it's very simple, because in all those trades, neutral long, neutral short, and non-directional, okay, in all those three different types of setups, we are looking for very expensive options, very overpriced options, because we're gonna sell them. It's all credit strategies. So in one hand, all those filters, okay, are looking for you know, high level of options, okay? Then the non-directional doesn't care about the trend. It only cares about the fact that the trend is not too strong. And if you recall, the ADX value is less than 25. In other words, the trend is not too strong. Where with the neutral, we also require the trend to not to be too strong, and then we want it to be either up or down. Okay, so in other words, you could find cases of trades that are valid to be taken neutral long that you also find as non-directional, because CRM is seen as a stock in an uptrend based on this scanner. And I'm reloading the chart. Okay, so in the daily time frame, so CRM is seen as a stock in an uptrend by the scanner. Okay, and it is. Okay, but at the same time, what the non-directional scanner identified is that whatever trend that was is weak, and as you can see, that trend is not strong anymore. Is that making sense? And because it's weak, then it's okay to do non-directional trades, okay? Because trends tend to last. A weak trend will remain weak for a long time. A strong trend will keep pushing for a long time, because trends tend to last, okay? Good, so that was the answer to your question, John Hammer. Very good, good one. Very good one. So what do we have here? we are 30 seconds away from the market opening. So I'm gonna get my option chain here. I'm just gonna close the window. Yeah, close the window. I'm just gonna reopen it in just 30 seconds so everything reloads from scratch with no issues. Okay, and we're gonna be able to assess those options on CRM and Merck. And hopefully we'll have premium enough to plan a trade. And if not, then we'll move into the world of neutral long and neutral short and play with the credit spreads instead of the iron condors. Okay, so here we go. So the market just opened. Okay, the market just opened. And therefore I'm gonna launch Option Station Pro. Remember, there is always anywhere between 10 to 20 seconds of delay between you and I. Normally is because of how YouTube propagates the video stream that I am sharing with you. So it is possible that you are thinking, Jose just said the market opened, and to me the market opened 20 seconds ago. Well, that's why. Okay, so but it's okay. We just got a few seconds of delay, so it's not a big deal. Okay, so what do we have in here? So we have CRM. What did we say about CRM? What we said about CRM is that we could afford to use up to May 31. We always like to start with May 24 first, and we would be looking at options above, oh, wait a minute, with CRM we said we were going to use pre and post market. So we were talking about options above 166, 167, something like that. So what do we have? Okay, well, we have 167.5, okay? And that option, okay, I'm a little bit uncomfortable, and also is something you need to know is that when the market just opened, normally you got wider spreads. So you can see the bid price of the option 12, the ask price 42. Okay, so I'm not delighted, or the reason why I'm not delighted is because you probably remember that we have a rule that says that we never sell options for less than 25, even though really what we're shooting for is 35. Okay, in this case, the midpoint, okay, would be 27. Okay, but also, you know, with this major spread, I'm a little unhappy. Because the market just opened, we may come back 10 minutes later and this has stabilized and give us better values. But I'm not too keen on exploring that because probably it's not going to work. So I'm going to look at May 31st, look at the 167.5. Now we got 36, which is the 35 we need or more. So now I'm happy with that, but I'm still uncomfortable with the level of spread we have here because if you look at the prior strike, it's not so bad. You look at the prior strike, it's not so bad. You look at the prior strike, it's not so bad. But that strike from 15 to 57, it's a major, humongous spread, and I am not comfortable. Okay, so again, we're not going to give up on CRM. We'll come back maybe 10 minutes later to see what happens with CRM because we may have those spreads that have stabilized. As the market starts trading and liquidity kick in, there are time, you know, where it's better, okay? Yeah, doesn't look good on TOS. Yeah, I get that, okay? So I am back to Merck, okay? We're gonna now continue planning the trade on Merck, okay? We are looking at options above 83 something. So my option chain now, option chain, come and join us please. So here is the option chain on Merck. Remember with Merck, we said that the earnings reports are happening on July 30. So actually with Merck, we have much more flexibility, even though, remember, I could certainly go all the way to July 19, which is 64 days from now, but this is absolutely not what you want to do, okay? Because, again, the reason why we are doing this is to collect a credit, and we want that credit to expire the sooner the better, okay? So I'm gonna start with May 24, okay, and see what happened with the 83.5, okay? And the 83.5 is paying me nothing. Okay, I'm gonna give you a chance of up to 3 weeks. So this is 1 week, this is the next one. 83.5 is 5 cents, so that's nothing. And I'm gonna look at the next expiration date, and again, it's not looking good when it comes to premium, okay? So premiums have been shrinking. It is likely, given the fact that the S&P is moving up, multiple days in a row now after the drop, is likely, given the reason why is likely the fact that the VIX was going to open 3% down, is 2% down now. Okay, so again, options are contracting their values. Okay, so which again, all of these could change at the speed of the light, 1 hour from now if something happens. Okay, so we always want to be ready to take those trades. Okay, but in the meantime, okay, I'm just gonna station and keep working on before I even plan the trade. Let me tell you, and I'll do it so you see the process and you know why. It's very simple. It's such a Walmart, and even though it makes aggressive, okay, it's kind of a very stable company, and therefore premiums reflect that. Certainly, that will not be a stock for us to use. Okay, so I'm going to move now into the world of credit spreads, finding to the short side, just like directionally short. Actually, the scanner found none. Okay. And there's a reason for that, okay, and the market seems to have been pushing back higher, and many stocks are back into this uptrend, and neutral long, neutral short, okay, but obviously given the amount of opportunities, I will begin with the neutral longs. Okay, so again, same story. We got Apple, for example, fantastic candidate for a trade, but the question is always the same. So, we type Apple, and it tells us that the earnings reports actually on the $189 per share type of stock. And normally, even if the UFOs are far away, typically because of the value of the stock, which is $100+, almost $200, normally you end up finding premium enough. And on top of that, based on the scanner, you also know the premium is pretty high value. Just based on the scanner itself. Okay, so I'm just loading the 60-minute time frame. I will wait for this to load because I need to look at my stats. PD means it's still loading with pre and post market, and we will conclude that pre and post market is way more relevant for Apple compared to anything else. So what are we gonna do? Well, same thing I did before. So what if I was to for example, draw a line from current price to the second green UFO? And what if I was to project that line to the upside? This amount is kind of extra, but I'm almost in the middle between this UFO and that UFO. Okay, more or less in the middle of the range. Ideally, you would be maybe some. Earlier, when I introduced the class and I said, after what happened to the market, okay, after what happened to the market, where the market has been falling and then coming back up, there are green UFOs below. Okay, also, as you can see, Apple is very heavily traded. So we have so many different types of expiration dates, okay? 20, 22, 24, 28. So, sometimes it's like 2 days difference between expiration dates. So there are so many, isn't it? I am getting that Red X and, that Option Station Pro just in case. Can you guys please give me confirmation that you hear me well and everything is good on your sides? Okay, so I'm rebooting the option chain. It's loading on my other computer screen. So I'll pass it back into the main screen in just a sec. Something, okay? So yes, I can see okay, I just made a little change on my side and hopefully this will help. Okay, I believe this should help. Okay, I'll keep going, and if it's not good, you guys let me know on the chat box, please. Okay, good. So what do we have? So we are looking at those options. We're talking about the two-loading Apple. So we are looking. Just bear with me, please, guys. I'm just going to be rebooting TradeStation here. Even though you don't see it, I am re-logging in. So I should have everything up in very little amount of time. What about you guys? Share with me a little bit in the comments box. How is it going out there? Okay, how is it going? Has the AutoUFOs helped with your precision, with targets, maybe with entries? Have you experienced any improvement in your trading, or maybe you haven't? What about you share with me a little bit of how is it going? Okay, because I know some of you are putting quite a decent amount of time and passion into the tools, and perfecting your rules, and your trading psychology and how you trade and everything. So I would be very interested to know how is it going. So please share with me, guys. And again, I'm loading TradeStation on my side, even though you don't see it. Okay, I'm almost there, guys. So, looking at your answers, Bojan. Okay. So I'm loading the option chain as well. I'm just multitasking a little bit, and I'm going to be reading your answers in a second, guys. Okay, so Bojan, it has helped me tremendously with clarity and being able to stick to strict rules. Nice. Yesterday I did credit spread on UNH and had 50. Good. Lisa, you're still learning. Just today loaded on TradeStation. Been having a lot of TS stability issues, so I need to call TS. Yes, I mean, we all know that TradeStation in one hand is probably the best platform in the world, in the other hand is delicate, so you need to tweak whatever variables on your computer, such as antivirus and things like that, to make it run smooth. And once it's smooth, it's fine. Even though you observe on my side that sometimes I do have issues. And remember, in my case, Bruno, watching the videos, there are so many of them. Can you share which one would help to get a jump start for short term? Well, for short term, Bruno, you will want to watch the one that are tagged as intraday 1, 2, 3, and 4. Those are the ones. Alton, yesterday I did a credit spread on UNH, 50% profit in the same day and close it. Nice. Yeah, Geneva, I'm currently do sim trading. It looks promising. I will definitely sign up after the trial. Wonderful. I mean, if no one knows that you have some sort of a struggle, send us an email, and if you want us to keep it confidential, we'll keep it confidential, because sometimes, let's face it, it's not too easy to publicly on a chat box, for example, just comment or no, I'm struggling or things like that. So sometimes it's not too comfortable, isn't it? But you can always let us know, via email, and we'll keep that into consideration. And subliminally, indirectly, understanding what your problem is, we will be adding in the get-together sessions content or tools or anything, trying to help you guys, okay? Because that's the ultimate goal, okay? The UFOs is just to make our life easy, okay? But in the end, we still need to click the button, okay? And there are multiple things that we need to master, and we are here to help, okay? Good, perfect. Okay, so I still got the red button here, but it does seem that everything loaded, I would say, correctly. So I'm just gonna go ahead and look at May 24, and I'm looking at the. This is still S&P. This is not Apple. Interesting. So let's do this, okay? Let's do this. Is that you could actually execute, because practice is what will make you learn. So it's not about getting greedy and leaving the session with trades because we make money with those trades. I mean, it's a nice benefit if you wish, but the real purpose of giving you trades really is for you to practice, and the profits is, yeah. So here we go. So I'm just moving to the main screen. Think or swim. Okay, so let me maximize it. And what we're gonna do is that we're gonna analyze a trade. Okay, if you're not familiar with Apple, it's okay, because in the end, what I'm gonna end up doing, you'll see how you've seen it before. Okay, so I want to change the settings here to show me everything. And then what I'm gonna be doing here is I'm looking at May 24. Okay, so now I got the data I need. So this is Apple information, and I'm gonna be looking at those 212 strike. This is what I'm looking for, and the 212.5, okay, it's paying me 2 cents, okay, on that May 24 expiration date, which I'm not surprised because that price level is very far out. Okay, so I'm gonna look at 212. In the next expiration date is paying me 7. Remember, I could not accept anything unless it's at least, okay, at least 25. That's the very minimum. Normally we go for 35. Okay, so 212.5 gives me 28 cents on June expiration. This is 29 days from now. Okay, so, and if I was to do the 212.5 above and below, I was to do the 160. So let's take a look at how much. You know why, guys? Sorry for that. I'm making a little mistake here. I was following the momentum I had from the prior trade with the CRM and Merck. I was doing an iron condor. Remember, let me restart if that's okay. We are planning on a trade to be directionally long, okay? Directionally long. So we're gonna be doing a credit spread below 160, okay? We are not gonna do an iron condor selling options above the red UFOs and below the green UFOs. We are only going to focus on the green side because remember, we are looking at the long scan, okay? So I almost made a little mistake there, human error. Make sure you are with me on that, okay? So what are we gonna do? The plan for the trade would be to sell the 160 put, okay? And below that, okay, we're gonna buy a put below. We'll take a look at which one, okay? That's the idea. And by doing so, what we're doing is we are betting that Apple will not reach 160 from now until the day of the expiration, which is probably something, you know, pretty likely, meaning unlikely that it will reach 160, and therefore pretty likely for us to do, in the sense that we are likely to make a profit. Therefore, I'm gonna start again looking at prior expiration dates, because normally the puts got a little more premium built in. So I'm gonna start with May 31, look at the 160, and it pays me 14. If I look at June 7, the 160 pays me 26, okay? And again, if I was to do a condor, I could take it, but with a credit spread, I will not, okay? So I'm gonna go for 14 of June, and let me tell you, I'm not gonna do it. It's not gonna work because the next strike goes from 160 to 155. So we're gonna be taking a risk of $500 to only make $10. So this trade will not make sense. Okay, it seems that the values are really shrinking today with the options. Okay, and I mean, I've seen a little bit of a spike on the market earlier, so maybe that's the reason where options are getting way cheaper. Okay, I wanted to start the day today with yeah, the market is up 0.8%. It was 0.3 earlier, aggressively up. You know, look at the long candle that is being produced today. Okay, yeah, this is shrinking the options, guys. I'm telling you. If you look at the VIX was down by 2%. I would expect to be down by more now, by 5% down. Okay, so options are becoming cheaper. This is working against us. Okay, so I'm gonna switch Okay, I'm gonna switch from credit spreads to debit spreads. Okay, when I did my analysis before the markets open, everything was looking good to begin the day doing credit trades, but in the end everything changed. Okay, and now because of what the market did, options are becoming cheaper. So if they become cheaper, I may be happy to buy them, and therefore I'm gonna do directional trades. Doing bull call spreads or bear put spreads. Okay, now I have no opportunities to short, so today I will be focusing on the long trades with Ally, AXP, Comcast, etc., etc. Okay, so which stocks would I like to check? Okay, so for example, Twitter is an interesting candidate for trades that are directional, because normally that stock picks up speed. Okay. It's a stock that, in many times in the past, you can see the way the stock behaves. At times, that stock is moving quite fast. Okay, what is not the ideal scenario is the fact that the stock is $38 per share. And therefore, to have a decent performance or profit, you will probably have to use multiple contracts, okay, unless your account is quite small, or unless you are in learning stages and you want to take extremely little risk. Okay, so I'm gonna plan a trade on Twitter if we find it possible, and if that's the case, we will execute it. Okay, so what do we have with Twitter? Well, on the 60-minute time frame, pre and post market is giving us 53. If I look at regular session hours, it's giving us 53 as well. So it's kind of the same. Okay. It's kind of the same, but to be honest, the setup it's really concerning me, where we have a lot of red above and nothing green below. So yeah, if that stock starts creating green, then the uptrend will continue. But guessing that green will be created, given the fact that it has not been created yet anywhere close to price, it's kind of a little bit of a hopeful trade, and I rather don't do that. Okay, so I'm going to move into another stock such as StarBUX to see if StarBUX is giving us an opportunity for a trade. Okay, so loading the 60-minute time frame of StarBUX, I would also want to look at what's the daily time frame. So the daily time frame, beautiful uptrend, new green UFO just formed. Actually, it's looking very powerful, guys. I believe StarBUX is making. Is it all-time high? Yes, making all-time high. And remember, when a stock is making all-time high, there is no red UFO above, and therefore it may keep going and going and going. Okay, so switching to 60-minute time frame, we have using regular, actually still pending data. So I'm just gonna wait a little bit. We have a good trade here with StarBUX. Okay, pending data. Come on. Here we go. We have it. So 55.8 is the probability using regular session. If we look at pre and post market, it's 56 instead of 55. Okay, so pre and post market data is more relevant for StarBUX, almost the same, but most relevant. And certainly we have green. Now we also have red. Okay, so what would be the safe approach on how to enter StarBUX from a timing point of view? Okay, well, from a timing point of view, it would be prudent to wait for StarBUX to clear the red UFO by having price keep going up, and the moment price goes above 78.59, this would be the ideal time when you want to buy StarBUX. Okay, now normally we would plan this trade. Let me rephrase that. When I said it would be the right time to buy StarBUX, let me rephrase it, because this is not correct the way I said it. It would be the right time to buy options on StarBUX. Okay, I am not proposing for you guys to buy the shares of StarBUX. I am planning on an options trade to take advantage of StarBUX without owning shares of StarBUX. Okay, I'm using options as a substitute. Okay, so normally in most of the trades that we have done, and I'm sure many of you have seen that, we have been planning bull call spreads. Bull call spreads, which is a strategy where you buy a call and you sell a call. And to do that, you need green UFOs and red UFOs. But what's my problem here? My problem here is that I don't have red UFOs, so I would not know which call to sell. okay, because I don't have red UFOs. So what am I going to do? Well, this is a case. Well, let me rephrase it. I do have a red UFO, but remember we said don't take the trade unless price goes above. And if price goes above, the red UFO will go away. Okay, so that's why I said we don't have a red UFO. I am assuming that price went above and then we take the trade. Okay. So if price goes above and there is no red UFO above, it may keep going and going. And how can I take a maximum advantage of that? Well, in this case, it's not going to be with a bull call spread. It's going to be with a call. Just a call, a simple call. We're just going to buy a call, okay? Now, which call are we going to buy? I cannot even calculate the TTT. The time to target, I cannot. Why? Because I don't know what's my target. Why? Because I don't have red UFOs. So what are we going to do? Well, we are just going to buy a call, okay? And just keep trailing, if you wish, our exit point, our stop, if you wish. We're going to keep trailing it up. As new green UFOs keep forming, we will keep following the price, until price turns, if that was to happen, and goes below the green UFOs. And then we would just get out, and whatever profit we collected, we would thank SBUX and go plan a new trade. Okay, that's gonna be the plan. So we're gonna be using no target in this trade. Okay, let me write it down. So no target in this trade. Okay, we will simply trail, follow price, okay, by moving our exit price below new green UFOs that may form. Okay, those green UFOs that may form are actually likely to form as long as SBUX goes up. If SBUX goes down, then forget about it. You're gonna lose money. Why? Because buying a call makes you money when it goes up. If it goes down, you would lose. So there is nothing to trail. Okay, but if it goes up as per plan, so then you would be able to collect those profits in this fashion. Okay, and we are not gonna cap ourselves with a bull call spread. We're gonna be using a naked call. Just buy the call and that's it. Okay, and because we cannot calculate the expiration date, okay, because we cannot calculate the TTT, so then I'm just gonna have to look at the earnings reports, which is rule number 2. Okay, so I'm gonna look at SBUX, SBUX, and whatever date we have for the earnings reports, that is the date I will be using for the option I buy, which is July 25. Okay, July 25. So I am loading, as you can see, Option Station Pro. So hopefully it will load SBUX this time. If not, I'll go back to Thinkorswim. Okay. Come on. Almost there. Okay. It's loading, guys. Here we go. So I am just typing now SBUX. Okay. So it's gathering all the market data for SBUX. No, I'm getting timeout errors with the option chain. This is really weird. So again, back to Thinkorswim. Okay, so I'm gonna type SBUX. SBUX, and as I type SBUX, I get the option chain, and I'm gonna be looking at a date, the nearest as possible to July 25 is gonna be July 19. Okay, and when I look at the different possibilities for options to be bought using that July 19 expiration date, you can see I could buy the 77.5 call, the 80 call, the 82.5 call. So which one am I gonna buy? Okay, which one am I gonna buy? Yeah, and by the way, let me see, it's happening right now, right? We are about to cross. Okay, so everybody ready to execute this trade with me? Again, paper money, real money, and the size you decide. and I am about to execute this trade. The current price for Starbucks is 78 something, so I'm just gonna purchase the 80, okay? Because if I don't get the 80, it's forcing me to buy the 77.5, okay? So if you buy the 80 call, okay, if you buy the 80 call on Starbucks, okay, which is July 19, I'm just gonna do it manually with TradeStation, so you get to see another way on how to do that. So I'm opening the options bar, so SBUX, okay, and this is gonna be 190719, and then it's call 80, okay, and when I do that, this is getting me ready to buy that option, okay, and because I'm doing it in, as you can see here, I'm using a SIM account, so with TradeStation I need to use limit, okay. So I'm gonna do it with a market order, not limit, okay? In your cases, guys, everybody, please, 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 okay, and by the way, we are now crossing 59 and 60, so it's time to get in. Fantastic timing, okay? I'm gonna buy to open with a market order. In your cases, please, please, please go ahead and use a limit order, okay? And pick a price in between 152, 155, okay? So you get a better price than what will I get, but basically I am buying this. 1, 2, 3, yes. And as you can see here, I have just been filled on buying the July 80 call. I've been filled at 168, okay? So you guys should be able to get filled at a little bit of a better price, okay? Okay, yes, I'm looking at your comments. No problem, Alton. You know, we are all human, my friend. I mean, I make mistakes myself. Okay, so it's not a problem at all. Thank you for checking and working with me. You know, in parallel. That's beautiful. Okay, I would like everybody, you know, kind of doing that. You know, because that it's kind of like you are doing the trade yourself. Okay, so that's it, my friends. You are in the trade. Okay, you know that you have a green UFO supporting you on the 60-minute time frame. Moving to the daily time frame, you have more green UFOs supporting you, another big one here, another one there, and you have 64 days of time for these to move up, okay? Are you guaranteed it's gonna move up? No. Are you in an uptrend and you have UFOs? Yes. Is the trend strong? Yes. So are you likely to make some profits? I would say yes, okay? So that's why I executed the trade. So out of practice purposes, even if you were to tell me, wait a minute, my account is already committed with other positions, you know, I don't want to take an additional trade, or I never bought a call in my life before, you know, things like that. Okay, so use a paper money account. Okay, use a paper money account, but it would really open your eyes if you were to open a trade with this call. Even if I end up not profitable in this trade and the market goes against us and the trade ends up losing, even if that was to be the case, you will get to observe it. If you have never done it before, it's a valuable experience, okay? So my friends, I believe that this would conclude the session. One key question from Lisa. So do you not set up stop until the green UFO is created? Correct. You're right. You enter this trade with no stop. Is this crazy? No. Why? Because I paid $168 for the call. So how much is the most I can lose? $168. There is no way I can lose more than 168 because I pay 168. So it's kind of like the stop is built in the trade, right? So risk management is in place without the use of a stop, okay? But now, as Starbucks starts moving higher, and new UFOs create, okay, let me simulate that happening, okay, let's say that's going to be the case, okay, so let's say that now that stock keeps going higher, 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 and then a new UFO creates, and then it keeps going higher, 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 and then a new UFO creates. So what happens? So you have entered here, right, but now a new UFO creates. So now this would be the time for you to set a stop at this price level, okay, right below the UFO, okay, and you know that would be, let's call it 79. So if this market went up, gave you a UFO, you place your stop right below, okay, and now instead of going up, it goes back down and stops you out, well, at least you still make some money. It's not going to be a lot, but some money. But if this market behaves the way a market making all-time highs tend to behave, which is keep going, okay? So then what would happen normally is more something like that. Move UFO, move your exit point, new UFO, move your exit point, price comes back, react to the UFO, keeps going, new UFO, move your exit point, and you keep following price until one day this thing stops you out, or it's July 19, the options expire and you need to get out, okay? And therefore you would have now made all this profit, okay? Which a size of a profit like that probably would have taken your option that in my case cost me 168, okay? And maybe that option, oh, I just erased everything by mistake, it's okay. That option 168 would easily become, you know, double or triple the value if you have such a move, okay? So yeah, that's the plan. So very relaxed trade and time to go. Okay, guys, so a pleasure to get together, a pleasure to spend some time with you guys, and super excited, okay? Super excited. For what? For what am I excited? Anyone guesses for what am I excited? Anyone would type it in the comments box. What's happening on Saturday, right? So yeah, super excited for the Saturday session. Again, I've seen your questions, guys. So, you know, in my mind, it's going to be very helpful, very powerful session, guys. Okay, so see you there. If you have questions, feel free to send. If you want to wait until, you know, basically sharing the questions at that time is fine as well, okay? See you soon, everybody, and keep up the good work. I'm very happy to see your emails, your progress. You know, some of you are connected, you know, via Telegram groups, via Discord groups. You know, some of you are communicating with each other. I am part of some of those groups too, and I see you working together, guys, and it's great. Okay, so keep up the good work, everybody, and see you soon. Bye-bye. The strike price is the 80, Royce. Okay, let me write it. Okay, so we are buying the 80 call that expires in July 19, 2019. Okay, that was the trade selected. Good one. Okay, everybody, see you on Saturday. Take care, everyone.